Apple is the largest company in the entire world and a good stock for all investors to at least look into. I'm the Max Invest YouTube channel and I do daily deep dives into stocks and market updates. If you enjoy the video, remember to like and subscribe, and remember, nothing said in this video is financial advice. First, we are going to look at understanding the business. Obviously, since Apple is such a big business that does so much, I cannot tell you everything about the business and go into detail, so you should do your own research on your own. However, we'll do a brief overview of what the business is. Apple is the biggest company in the world with over a $2 trillion market cap. Apple designs, manufactures and markets mobile communication, media devices and personal computers, and it also sells a range of related software, services and accessories. Apple has a wide range of products. In fact, it has 1.65 billion products that are currently in use. These products include the iPhone, the Mac, Apple TV, the Apple Watch, iCloud, Apple Pay, AirPods, Apple Arcade, and Apple Music. Obviously, the iPhone is the biggest one out of all of these products, but all of these products have been massive successes and have gotten heaps of use around the world. Apple has even entered into a partnership with Goldman Sachs to make their own Apple Card, which is a credit card. Apple can also benefit from subscription-based revenue with Apple One and Apple Music, and I do love to see this in a company, as subscription-based revenue shows a long-term outlook and it tends to make the companies a lot of money by appearing cheaper. Apple has 506 stores across 25 countries. However, this is not where the majority of Apple products are sold. In fact, the majority of Apple products are sold in other stores, such as JB Hi-Fi in Australia and your other retail stores in America. Let's take a look at Apple's market opportunity. And I think the biggest market opportunity in the short term is the super cycle of iPhones and 5G that will come in the next couple of years. Phone sales struggled early in 2020. However, they bounced back to record levels in late 2020 with the 5G compatible iPhones beginning to sell. 5G is expected to roll out on a large scale by the end of this year, and by 2022, nearly half of all iPhones will be 5G compatible. 5G is superior as it will be 10 to 100 times the speed of 4G. Currently, all of the 5G phones are expected to start at a slower speed, but still be substantially faster than 4G. The Chinese government is prioritizing 5G massively and building heaps of 5G towers, and it is likely that we'll see many other governments doing the same thing very soon. 5G is expected to cover 60% of the global population by 2026, and 5G really does look to be the future of iPhones. 5G phone prices are currently quite expensive. However, they will become relatively inexpensive in the future. Apple are best positioned to capitalize on this 5G supercycle. There is no other phone company that is in anywhere near the same position as Apple. Apple have a market cap of $2.27 trillion relative to the next biggest competitor being Samsung with only $301 billion. Apple also have the most cash out of any company in the world by a mile. This is very good for Apple, as it means Apple can continue to expand and innovate. In fact, in October 2020, Apple announced 4 new models with 5G technology integrated. Apple also has 74.6% trade-in brand loyalty. This basically means if you're looking for a new phone and you've previously used Apple before, like nearly everybody has, you're likely, in fact very likely, to use Apple again. And Apple is one of the biggest brands in the world with a significant amount of brand loyalty to it, which means they're allowed to raise prices and people will still buy these iPhones. This means Apple are very well positioned for a lot of people to be buying iPhones from them with 5G. Apple are planning to grow significantly and sell up to 96 million iPhones in a year, which is 30% year-over-year growth. And this will be catalyzed by 5G, and that's why Apple believe they will have this growth. It's also important to take a look at Apple's financials. Apple's return on invested capital has been constantly improving and constantly remaining very high at between 30 and 40% in recent years. This is great because it shows how well Apple are using our money to innovate and create products. Apple has also been having a constantly improving earnings per share and a constantly improving revenue. This is very great as everything looks to be heading in the right direction for Apple. In fact, on a 10-year compounded annual growth rate, Apple's revenue, assets, free cash flow, and earnings per share has increased at above a 15% rate. Anything above 10% is very good, and above 15% is amazing. Apple have also had an average PE ratio of 15, showing they're not that overvalued. Now, Apple's PE ratio is more into the mid-30s. However, I think with the 5G supercycle, they can definitely hold and even have a higher PE ratio. Apple have a debt-to-equity ratio of 0.36. Generally, anything under 1 is pretty good, and anything under 0.5 is extremely good. So to see Apple have nearly no debt is great, and this can be expected from the biggest technology company in the world. They also have a current ratio of 1.36, showing they have 1.36 times the total current assets as total current liabilities, which will be very good for Apple going into the future. Let's also take a look at where Apple's revenue is coming from. iPhone sales have slightly decreased since 2019, however this is likely to change with the 5G supercycle that is coming up. However, overall, total net sales have improved 6% since 2019. Apple have seen big improvements in their Mac sales, iPad sales, and their services sales. Services sales are important as this is one of their fastest growing parts of the brand, and this includes all the things like Apple Music and Apple Pay. iPhones still do count for over 50% of their sales. However, Apple is selling all of their products at a very fast rate, and this is very good as they have quite a diversified revenue. As we can see, Apple have had a steadily increasing total net sales. In the December quarter, Apple had a massive increase, showing they're doing well recently and their margins are improving. 61% of Apple's sales are international and the rest are in America. Their revenue is diversified throughout the entire world. As we've already seen, Apple has a strong balance sheet with a great current ratio and a great debt-to-equity ratio, and this company has had amazing finances for the past 20 years and continues to improve. As I'm about to show you, Apple is such a good company finance-wise that the analysts never get it right. Apple is expected by the analysts to have solid growth of 13% every year, year over year. The analysts believe that Apple can get to $317 billion in revenue by 2021 and $333 billion in revenue by 2022. However, the analysts have actually been wrong on a consistent basis, and in December, the high estimate of analysts was $110 billion. However, Apple had $111 billion in revenue, completely destroying expectations. As we will see, in their most recent quarter, none of the analysts could get Apple right. Earnings per share was far off, with $1.68 versus the estimated $1.41. Revenue again was far off. iPhone sales was far off, $5 billion off. Service revenue was far off. Mac revenue was about right. However, almost all of the analyst expectations for Apple have been wrong. As the biggest company in the entire world, Apple continues to beat on expectations that the analysts set for them, and this is likely to continue into the future, and I don't think the analysts can see the full potential of this company. Let's take a look at all of Apple's competitive advantages. One big competitive advantage for Apple is they are not a new company. They were founded in 1960 or 1976, and this means they have a lot of experience in the space and they've had tons of time to develop and improve their products. They are already the largest company in the whole world. They have so much cash and they can literally do anything they want. They are so much bigger than all of the other competition, and their advantage is just far superior in any space, really. Apple are horizontally integrated, which means they do everything. As I've already told you, they have a massive range of products, and this is very good for the company as it means they have a diversified revenue into the future. Apple are one of the companies with the biggest brand loyalty in the world, as we've already said, which is a big advantage as they can raise prices unlike any other company. And Apple are constantly innovating. You would think in the early 2010s when Apple brought out their iPhone, that could be it for the company. However, they keep thinking of new ideas. There's always Apple Cards, there's AirPods, there's Apple Watches, and they keep thinking of new stuff and innovating. In fact, they're even thinking of producing an Apple vehicle. This is great as it shows that the company will continue to do stuff in the future, and I have faith that in 2050, when I'm still holding my Apple stock, they will be doing more and more with the company and I will just be buying more Apple stock. Apple have a strong integrated supply chain and are vertically integrated themselves. This is good as it means there won't be any short-term supply disruptions and the company is self-reliant, which is expected for a company with a $2.27 trillion market cap. Apple also appears to have a very good management team, and this does seem pretty obvious as they are the biggest and best company in the entire world. Apple was originally founded by Steve Jobs. However, Tim Cook has been the CEO of Apple since 2011. Tim Cook is highly qualified as he's been the CEO of the biggest company in the world for 9 years and previously held high up positions at Compaq. Tim Cook owns $112 million worth of Apple share relative to his salary of roughly $15 million per year, showing he owns a ton of stock. I have, however, seen that Tim Cook's net worth was originally, or is currently, significantly bigger than this $112 million figure, so he may have sold some of his Apple stock. However, it is clear that he still has a lot of faith in the company with the amount of holdings he has. Since 2011, Tim Cook has doubled the company's revenue and their profits, and he has been doing a great job there. He is highly ambitious and is constantly looking to innovate, as we can see with their Apple Car and all of these other products. Luca Maestri is the Chief Financial Officer, and he is very experienced in similar big financial positions at a range of other companies prior to 2010. Apple has a great management team, and they spend a ton of money on getting their management team absolutely perfect and have hundreds of thousands of employees working for Apple. I want to have a look at Apple's risks, and bear in mind, Apple is probably one of the least risky things that you can possibly invest in besides ETFs. It's the biggest company in the world, and if you get it at a pretty good price, this is not a risky investment. One big risk of Apple is the pandemic continuing. However, even if this does happen, Apple have already shown that they still have great revenue. Another risk of Apple is they are dependent on other sellers and the third party. However, Apple products are in a wide range of diversified sellers all across the world, and this still doesn't seem to be too problematic. One big risk for the company is that it is subject to changing laws and regulations. This does, however, seem more of a problem for companies like Google and Facebook than Apple. However, there are some laws that could reduce Apple's revenue into the future. Despite this, if you get Apple at the right price, it is not a risky investment. Let's take a look at what Apple's fair value is. Apple has recently been trading at quite a high PE ratio and is actually at quite a high price right now. I don't think that Apple's price will, however, come down as there are so many catalysts moving forward like 5G and iCars. Obviously, if there is a macroeconomic correction, Apple's price will come down, but all I will do with my stock is hold all of my current positions, and if it came down, I would honestly probably buy more Apple and just leave it for 15 to 20 years and see how it does. And I do believe over that time, Apple will do very well. So I do think $135 for Apple is a relatively fair price. I think it's decent for the company, and I do think it will be able to build on this share price. If you enjoyed the video, make sure to like and subscribe. I do daily deep dives and market updates. I did miss yesterday as I was preparing a few different updates, and I'll probably do 5 or 6 times a week every week. So thanks for watching, and click on this video right here.